Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in your favorite company's financial reports. Today we're diving deep into Boston Scientific's latest quarterly earnings, and let me tell you, it's a big one packed with acquisitions, new products hitting the market, and some serious financial maneuvers. Before we jump in, if you love getting the real scoop on corporate finances, smash that subscribe button and turn on notifications. We also have a fantastic community over on Discord linked below where we break down these filings together, so come join the conversation. Alright, first glance at the numbers for the second quarter of 2025. Boston Scientific is showing some serious growth. We're talking about net sales hitting $5.061 billion. That's up a hefty 22.8% from last year. Digging a little deeper, this growth wasn't just from selling more products, it was also boosted by some smart acquisitions. They specifically highlighted the acquisitions of Silk Road Medical and Axonics in late 2024, and more recently Intera Oncology in the second quarter of 2025. Now let's look at where this money is coming from. The cardiovascular division is a powerhouse, bringing in $3.345 billion in the second quarter, up a massive 26.8%. Boston Scientific specifically mentioned their electrophysiology business, especially their Farapulse pulsed field ablation system, is driving a lot of this. And that acquisition of Axonics is clearly a big win. Even the urology segment saw a huge jump, up 28.9% to $676 million. This growth is attributed to their stone management and prosthetic urology products, showing diversification is paying off. While sales are up, the gross profit margin actually dipped slightly to 67.7% in the second quarter, compared to 69.2% last year. They're attributing this mainly to around $85 million in inventory charges related to discontinuing some of their SRI to aortic valve systems. It's a tough call to make, but likely a strategic move to focus on more profitable areas. On the expense side, things are climbing. Selling, general, and administrative expenses went up 19% year over year. This rise is linked to higher sales, pushing up their selling costs, product launches like that Farapulse system, and again those costs associated with their recent acquisitions and restructuring efforts. But they're not skimping on the future. Research and development spending also jumped significantly, up 37%. This shows a commitment to innovation industry. They're investing to keep that pipeline of new products flowing. Now let's talk about the bottom line. Reported net income attributable to common stockholders was $797 million for the quarter. However, they also like to present adjusted figures which strip out all those acquisition, restructuring, and other special items. After those adjustments, their net income for the quarter was a very strong $1.127 billion. This is a key point to remember when looking at their media releases. They emphasize these adjusted numbers. Looking at the first 6 months of 2025, Boston Scientific's performance is equally impressive. Net sales reached $9.724 billion, a solid 21.9% increase over the same period in 2024. Again, a large chunk of this growth comes from their acquisitions, but the organic growth is also robust, showing solid demand for their core products. When we look at where the cash is coming from, operating activities provided $1.827 billion in the first 6 months of 2025. That's a huge jump from $977 million a year earlier. This is largely due to better sales and income, some smart inventory management, and lower tax payments. On the flip side, investing activities used up $1.66 billion. A massive portion of that, $1.2048 billion, was spent on acquiring new businesses like Bolt Medical, Sonivic, Cortex, and Intera. It's clear they are aggressively expanding their portfolio through acquisitions. In their financing activities, they actually managed to raise quite a bit of cash. During the first half of 2025, they received $1.58 billion from issuing new euro-denominated bonds. The 2025 euro bonds, they used some of this to pay off older debt and the rest for general corporate needs like funding more acquisitions. Now let's talk about their financial health with debt. They're currently maintaining a leverage ratio of 2.16 times, well below the 4.75 times limit allowed under their credit facility, especially after that big Axonics acquisition. This indicates they have plenty of room to maneuver if needed. Looking at their balance sheet as of June 30, 2025, total assets climbed to $41.5259 billion. A huge part of that is goodwill and intangible assets, totaling over $25 billion, largely due to all those acquisitions. This means they've bet a lot on these new companies integrating well and delivering future growth. The goodwill, which is basically the premium paid over the fair value of acquired net assets increased significantly to $18 billion. This signals aggressive expansion, but also carries the risk that if these acquired businesses don't perform as expected, there could be future impairment charges like the ones they saw in 2024. A really interesting item is their contingent consideration liability, which jumped to $367 million. This is money they might have to pay out in the future based on certain milestones being met. It shows how many of their deals have these earn-out clauses, tying future payments to performance. So what's the story here? Boston Scientific is executing a bold growth strategy through acquisitions and focusing on high growth areas like electrophysiology. They're investing heavily in R&D and expanding globally, especially in emerging markets. The slight dip in gross margin is a concern, but it seems tied to strategic decisions like discontinuing certain product lines to focus on more profitable ventures. The sheer amount of goodwill on their balance sheet highlights the acquisition-heavy strategy, which, while potentially rewarding, also carries inherent risks. If these acquired businesses don't deliver the expected synergies, it could lead to future write-downs, but for now the numbers are strong, operational growth is solid, and their financial footing seems secure with plenty of liquidity and manageable debt. They're playing offense, and it seems to be paying off, but like any aggressive growth strategy, it's one to watch closely. Alright, that's our deep dive into Boston Scientific's latest quarterly report. What do you think about their acquisition strategy and that dip in gross margin? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more. And definitely join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and we'll see you in the next one.